More trouble in the hedge fund industry. Ivaldi Capital shutting down after its biggest investor pulled out. That's according to a person with knowledge of the matter. Joining us now, Bloomberg hedge fund reporter Nishant Kumar, who broke the story. Why is this biggest investor, whoever it is, pulling out?
They might be diversifying their business or finding something else attractive, more attractive. Not to say that Ivaldi's performance was bad. The fund made 13%. And that is why it's a very surprising development. 13% is more than the average returns in hedge fund industry. 13% is more than money made by equity long-short hedge funds where this Ivaldi operated. So that's why it's very surprising and shows how risky it is to basically rely on one single investor for most of your money. Which
leads to the obvious question, how commonplace is it for a hedge fund to be dominated by a single investor?
Fortunately, it's not very common. Investors don't generally like one investor dominating a fund because obviously if he pulls out, then all of a sudden business plans go off track because your cost never falls to the same with falling AUM. So a hedge fund is trapped into maintaining the infrastructure, spending all the money, but with significantly lower AUM. So it's a big key investor risk that no other investor like to basically take.
Nishant, Ivaldi was founded by 3 Citigroup prime brokers, right? So do we know anything of their future plans? I mean, one would assume they would try to get different funding perhaps and relaunch in some fashion.
Not for the time being, because they are very clear, according to our sources. They have 2 offices, one in London, one in Singapore. They are shutting down operations. They may very well emerge somewhere else in future, but for now they are completely shutting down the business. It affects about 22, 28 employees that they have.